Cost Accounting, Chapter 5. Chapter 5 talks about activity-based costing. When we start, we have volume-based costing and activity-based costing. So in volume-based costing, our results might be distorted because our indirect costs don't always occur in proportion to production volume. Volume-based costing causes cross-subsidization of outputs. This means some of our products end up being overcost and others are undercost. Activity-based costing gives us more accurate costs by thinking about what makes up our indirect or overhead costs, what drives those overhead costs, and what's a better indicator of how products use our resources. Volume-based costing is good for companies that are relatively small and have few overhead costs, or when we have homogeneous activities across multiple product lines, service and product lines. So basically, if we're using process costing, we can use volume-based costing. It isn't appropriate, however, for every type of situation. Activity-based costing looks at the idea that activities require resources and resources cost money. Money and activities are the things that we use to create our products and services. What those activities are will be unique to every type of situation. So the activity is a specific task or unit of work done. We might have production setups, we could have maintenance, we could have janitorial, and the resource is the economic element consumed in performing activities. Salaries, supplies, electricity, water. And the cost driver is the factor that causes the change in an activity. For example, if we have robotic automation in some of our production activities, then we know that the machine hours are a better cost driver for that activity than the use of direct labor hours, because with the robotics, the machine hours are doing the job, thus driving that activity. We look at resource consumption cost drivers and activity consumption cost drivers when we're making decisions about our activity-based costing system. So resource consumption cost drivers measure the amount of resources consumed by an activity, the number of items in a purchase or sales order, the number of hours used by a machine, the number of setups for a machine for production runs, the number of square feet in a factory. And activity consumption looks at the amount of demand placed on a resource by an object, the number of batches used to manufacture a product, or just the product line itself. We have a two-stage cost assignment when we're looking at activity costs. So we have our indirect support costs, our resource costs, such as factory and overhead, we assign to activity cost pools and then to cost objects. So the first thing that we do is identify the activities. Then we identify which costs go to which activity. And then we assign those costs to individual jobs, customers, products, whatever our end production is, product or service is. In volume-based systems, we assign factory overhead based on a single or departmental cost pool rate, and then to products or services using their volume-based rate. Activity-based systems assigns factory overhead to activities or activity cost pools, looking at that individual resource consumption and then assigning to all cost objects using the amount of consumption of those resources. So how do we decide? Well, in the activity-based costing system, we define cost pools as activities rather than production plant or department cost centers. So instead of having the processing department and the packaging department, which give us departmental rates, we actually have different activities. We might have a setup activity or a packaging activity. And we use those drivers based on activity for that cost object. In volume-based approaches, we have little relationship between the consumption of resources and our cost objects. We're just using a base machine hour or direct labor or departmental cost across all products, regardless of their resource consumption. We have 3 steps in developing an activity-based costing system, which we've talked a little bit about already. The first thing that we have to do is do an activity analysis. What are our activities that we use in the consumption of resources? And then we're going to assign cost to those activities using a cost and effect relationship. What is the number of labor hours, setups, machine hours, employees, square feet? There are a wide variety of ways that we can assign costs to different activities, number of purchase orders. Finally, we assign activity costs to our individual cost objects, which are our products or services. So we use our cost drivers, such as the number of purchase orders, the number of direct labor hours, the number of machine hours, to assign those activity costs. When we're doing our activity analysis, we have to gather a lot of information. It's important to really understand how our organization functions. If we're looking at a product or a service, how that product or service comes to fruition, and what kinds of activities drive those items. So what work or activities do we do? How much time did those activities take? What resources do we need to perform those activities? And what's the value of that activity for the product, service, customer, or organization? Applying activity-based costing in a system takes time and energy and good management skills. We have to really think about how this company is working strategically and how activities consume resources. We have 4 different levels of activities. We have unit level activities that are performed on each individual unit or product or service of our company. Then batch level activities, which are performed for each batch or a bundle of units or a group of units. A product level activity supports the production of a specific product or service. And a facility level activity supports overall operations, such as our building rent and utility costs would be facility level costs to support all operations. When we're looking at unit level costs, those are the costs that are performed for each unit of product or service. This could be related to units of production related to depreciation of factory machinery. How many units do we produce in a machine? Energy costs for machinery used for individual units of production. We might have machines that are only used for specific products. Then batch level costs are things like machine setup costs. So a machine setup cost will be when we set up a machine to run a group of items or a batch of items. So for example, if we're in the textile industry or we're making clothing, we might load a machine, so our machine setup with blue fabric. And each amount of blue fabric that we put on that machine can make 100 clothing garments. And after we've produced 100, we need to reload the machine. So we have batches of 100. So our machine setup cost is one batch that will cover 100 products. We also can do quality control costs, wages for workers that might be moving products within our factory. So if we have a factory set up, an assembly line set up where somebody brings the direct materials to us or a work in process to us, we work in a certain process in the assembly line, and then we transfer it out to the next group. And then we can have energy costs for machinery that is used for multiple units of a product at the same time. In this example, we have an oven that bakes a batch of cookies for a commercial baker. So depending on how large our oven is, we can make more than one cookie at a time. So each pan of cookies that we would put into an oven would be a batch and not an individual product. And our product level cost support a specific product line or service line. So these are our salaries for product line purchasing managers, quality control costs, product development costs, marketing, research, depreciation and maintenance for specialized machinery that's dedicated to the production of a single product or service line. It's very rare that a company just has one individual product line. So the product costs will go with each type of product. And then facility level costs. So these are the overall operations, our security, the insurance and property taxes, the salary of our plant manager, the factory building depreciation, the building rent or mortgage costs, our facility level